Hello everyone, thank you for joining our webinar today. We're here today. My name is Roseanne Bradley. I'm a senior copywriter at Your Overseas Home. And today we will be talking to Ricardo Jesus at Chase Buchanan, who is over in Portugal. And we will be running through the financial and tax essentials of moving to Portugal. I will just give it a couple of minutes just in case anybody else wants to join. And then we'll start just in a moment. Ricardo, would you like to introduce yourself?
Yes, thank you, Rosie. I want to welcome everyone to this webinar. My name is Ricardo. I'm Portuguese. I work for Chase Buchanan. I've been living in Portugal most of my life, except for a period where I did my studies in the US for 7 years. And now I moved back to Portugal as well to work in this industry for a few years now. And I'm glad to take this presentation today. And my goal really today is just to help you and cover the most essential aspects of someone that wants to move to Portugal. As I experienced that myself, moving to a new country could be quite difficult. So I just want to give you some tips to begin this journey and have a lot of information to give you a bit of a roadmap so you don't make mistakes and you can make the move to Portugal the simplest way possible. And today we'll cover some topics. I'll introduce a bit of the company as well, and we'll cover some topics such as moving to Portugal as a EU national versus a non-EU national. What does the process of residency look like? And then look at the different types of visas that are available, as well as the tax implications and things you need to start planning ahead before making this move.
Fabulous. We've got quite a few people just on before we start. If you're having any problems with your sound or how your webinar looks, there is a help button just in the bottom left, which should be able to give you some advice. And if you have any questions while we're during the webinar, we will have time for them at the end. There is a chat section just on your bottom right where you can add a question and I will reply to you in the comments if we don't get to it at the end. So whenever you're ready, Ricardo.
Yeah, let's get started. So again, for people that just joined, so welcome everyone. My name is Ricardo. I'm Portuguese and I work for Chase Buchanan. I'm from the office in the Algarve in Portugal. And the purpose of today is just to, with this webinar, is to touch on the financial and tax essentials of moving to Portugal. In a nutshell, just to help you design a roadmap to begin with things you need to be aware before you start making this move to Portugal. So first things first, I want to just explain a bit of who Chase Buchanan, who we are. So our mission is very simple. We want to have the most qualified and experienced team to provide quality financial advice regardless of the location of our clients, okay? And we've been around for around 20 years, and we now have offices in the countries that you see. So still in UK, as originally we were a UK company, Portugal, Spain, Belgium, Cyprus, Malta, and as well in Canada and US as well. Okay, and part of just so you have an understanding of the group structure is originally we were a UK company, and we still hold in the middle, as you see, the FCA regulation to help our clients in the UK and in Europe. But because of the exit agreement with Brexit, now we need a European license to help clients in the European area as well. So therefore, we got ourselves a European regulation through SISEC, which gives us, you see the MiFID passporting rights is anything when it comes to investments, and the IDD is anything that comes with insurance products. So we hold the right qualifications, the right regulation to help clients both in UK and both in Europe. On the right side is because there's a lot of our clients tend to move from different countries in Europe. For example, if you go to Portugal, to Spain, to Italy, to France, the tax could be a bit complicated. So we have a team that helps us and helps our clients. So anything you want to understand the consequences of moving from one country to the other, we have a team that support us and support our clients to understand how the process will work and what things they need to be aware. And something unique we offer is that we have a US regulation through our US offering that we can help clients that are moving from the US to Portugal and as well in the US, which is something unique and that we can also help. So this is just a bit about us and our services. So our services is very similar to a traditional IFA. So we help with managing your wealth, and it can touch in things like pension, so pension transfers, pension management, as well as the retirement planning, financial planning, the portfolio reviews, cost comparisons, investment management, and as well with the regular savings, education planning, life cover. So most of the things that a normal traditional IFA counter will do as well. So welcome to Portugal. So I believe one of the attractive things about Portugal is, of course, the culture, the landscapes, the climates. As some of you might be in the UK with negative degrees, here is 17 degrees, so it's quite nice. But on top of that, Portugal, of course, other countries in Europe, very similar, like Spain, Italy. So to attract more people and more investments, Portugal created recently, last few years, some tax incentives to attract that investment. The main thing was to reduce the direct tax, in this case, the income tax, to collect indirect tax. So having people spend more money here, invest more money here to, therefore, boost the economy, create employment, and generate more revenue. So the main question is, how can you start this move? And with that, there's two different things we need to look at. So the main thing is if you're coming from, as a EU national, so coming from a country in Europe. So if this is the case for you, it's a bit more simple. If you're coming for a short-term visit, again, this is 90 days visits, there's no visa requirements. So every 90 days out of 120 in the Schengen area, there's no need for a visa, which is quite nice. Which also you have the freedom of movement to go from any country in the EU. If you're coming from Ireland, just need to make sure that your passport needs to be at least 6 months valid before it expires. It's a specific thing. And if you then want to start thinking about residency, the process is after your 90-day stay, you need to register for residency. And that goes into step 2, which you need to apply with CEF. CEF is the Foreign Services for Residency. So you need to apply for that certificate. Then you need to get your NIF. The NIF is your fiscal number. There is no need to buy a property, or there's no minimum requirements that you have to buy for a certain value. Okay, and you can enter the healthcare system. And as you may know, Portugal actually has a good healthcare system, so you can apply for that. And you can stay here for 5 years, and then after 5 years, you can apply for a permanent residency or citizenship. Okay, so the process for EU national is quite simple. It changes a little bit when we look at someone from non-EU, in this case the UK, because Brexit now sits in this category. So look at stage 1. Stage 1 will be from visiting Portugal, finding out the location you want to see, location where you maybe want to buy a property, and you have 90 days. The 90 days Schengen, which 90 days every 180 you can stay here with no visa. During this period, we recommend to maybe find a state agent to help you with view a property, and also get a lawyer and an accountant with things as get your NIF number, get your bank account, which a lawyer and accountant can easily assist with this. And maybe during this 90 periods, if you find a good property, maybe get an offer on one of those properties that you like. Then you fly back to your home country and maybe put your home property on the market. We'll start the stage 2, and that is where you apply for the visa. And this needs to be at the Portuguese consulate in your home country. Then there is a 2-3 month waiting for your appointment date, which then we move to stage 3. So after those 3 months, you attend the meeting. That meeting goes well. you will need to wait 30 days for them to make the decision. If it's approved, then they issue a 4-month residency or entry visa, And for that 120 days, you then can come to Portugal, arrange your meeting with the CEF to get your residency. So you got the visa first, then you move to Portugal, you fly to Portugal, and you get your meeting with the CEF to get your residency. You can also then look to apply to the National Health Services, but you can also have your own private health insurance if you prefer. What are the benefits of this? Is you can have the family reunification. If you have family coming with you, they can come based on your visa. Gives you a 5-year residency rights. After that, permanent residency, and you can have freedom of movement in the EU thereafter. So there's a couple of options when it comes to the visas. So on the stage 3, the types of visas you can apply for a non-EU national. So one of the most common is the D7. D7 is known as the passive income visa, which is applicable for anyone who has either foreign income or pension income, and this allows for the 5-year visa. It's renewable every 24 months, but does not give you the right to work in Portugal. It gives you, then after you can get a permit, and you can then work in Portugal, but initially it doesn't. What are the requirements? You need to show passive income, which can come from a rental, pension, interests, investments, but it needs to meet the minimum requirements of the minimum salary in Portugal, which for the primary applicant is 760 euros a month, which is around 9,000 euros per year. And for the spouse that comes as well, it's half of that. Okay, so usually it's quite easy to meet these requirements. You may need to also have your private health and travel insurance as well. So this is some of the minimum requirements. Also, an option if you're looking to come and to start your own business as self-employed, you can look at the D2 option, which is for people that look to start their own business or conduct their own business here in Portugal, or self-employed people. Another common option, as most of you are probably aware, is the Golden Visa, which is a program that the Portuguese government started to bring more investment, which has specific requirements. If you look to buy a property, it could be commercial or residential, with a minimum 500,000 euros, while before this was available for anywhere in the country, now it's only in some specific areas, so no longer in the coastal areas and Lisbon and Porto and the Algarve, so more in the interior. The minimum is 500,000 euros. You can get a 20% discount if it's really deep interior, it's 400,000. Another option is if you're doing some construction or rehabbing a property that is over 30 years old, you can only invest 350,000, which reduces to 280 if it's deep interior. Another option is the investment fund. So if you're investing in Portuguese funds or the venture capital Portuguese funds at a minimum of 500,000, it's also an option. Or if you're starting a business that you're creating at least 10 jobs. So either one of these, you can get your Golden Visa. So what is the main benefit that the Golden Visa has versus the D7 is that with the D7, you need to stay a minimum of 183 days per year in Portugal. The actual rule is 30 months out of the 60, which is 5 years. So half of the time you need to spend in Portugal. With a Golden Visa, you only need to stay 7 days per annum. The other benefits are the same: the 5-year residency after and the family reunification. And this is now as a tax benefit. So it's called the non-habitual residency, even though it has residency, the name is a tax status, which is called the NHR. It's completely separate from the visa. It's just a tax status that anyone that either EU national, D7, Gold Visa can apply to. The main requirements is that you haven't been a tax resident in Portugal before, or at least in the past 5 years, or that you're going to stay in Portugal for more than 183 days, or you select your main residency in Portugal. So those are the requirements. What are the benefits? So this lasts for 10 years. The pension income, if you have income, it reduces to 10%. Before it used to be 0, now it's at 10%. But you're going to see the rates are quite high without this regime. If you have dividends, interest, or royalties, there's no tax. And if you have a specific activity, which is a huge list of different activities, any income from that is capped at 20%. And on this next slide, you can see, without this regime, as a normal tax resident, the rates could be quite severe. So from any income from 0 to 80,000, the rates go from 14% to 48%. Anything on top of 80 to 250, there's an extra 2.5. Above 250 is another 5%. There's a bit of an exemption if you have employment income or pension income, could be up to 8,500, but as a marginal rate could be quite high without the non-habitual residency. Capital gains is at 28%. Excuse me. The property tax, it's not much, and it's only on properties above 1.2 million, and VAT is from 6% to 23%. A positive side is that there's no wealth tax and no inheritance tax in Portugal. The inheritance tax in Portugal only applies if your estate falls under someone that is not a spouse, an ascendant, or a descendant. There's a 10% stamp duty. However, if you're coming from the UK, it's important to know that the inheritance tax falls under your domicile, based on your domicile, not residency. Okay, so if you're changing your residency, you're probably not changing your domicile. So it's important to have an understanding, and we'll touch that in a second. So when it comes to the financial and tax planning here in Portugal, so what are things you need to be aware? So in general, if you have a UK advisor, they can no longer advise in the European Union country. That's why Chase made this the changes before in the regulations. If you hold a UK pension, you can have a 25% tax-free allowance. It's called a PCLS in the UK. However, if you move to Portugal, you're gonna be taxed here at that free tax allowance, and Portugal does not recognize it. So our advice is that take that before you leave. Okay. Also, consider a SIP or a QROPS transfer. Again, could be probably a topic for another webinar, but have this in consideration because it could have better options for you. Some things to know: if you have a UK government or civil service pension, those are usually taxed at source, and state pensions can be, not necessarily, but can be taxable in Portugal as well. It just depends on, because Portugal does not recognize the personal allowances that the UK has. So you might have zero rate tax because of the personal allowance in the UK, but in Portugal, they're going to look to tax you. So just it's important to be aware of these things. If you have an ISA or some stocks and shares, those are going to be taxable in Portugal at 28%, especially the ISA on the whole gain. This is the change that happened recently. So maybe it's important to consider this or cash these before, except if it's a cash ISA. Anything outside of that, it will be taxable in Portugal. So consider the selling before. And if you have an Irish pension, an option is an ARF, which is basically an annuity. Those are taxable in Ireland at marginal rates. Okay, so there's specific options. With the Irish pension, it can be much more beneficial, especially with the NHR regime. Secondly, of course, when you're making the move to Portugal, it's important to understand that you are restricted on your visits to the UK by the statutory residency tests. So you may fall under the dual residency. So it is something that it needs further details on this, but there's a specific amount of days that you can stay in the UK to don't fall under the dual residency, which would be quite complicated. One of the things that Portugal, the tax treatment offers, is a Portuguese compliant investment bonds. There are several benefits with this. So for example, if you're selling your ISAs and your stocks and shares and you need an investment option, this is very good because there's no capital gains on the growth. During the NHR period, which is 10 years, any income that any gains you have, any withdrawals you make, there's no tax because it's classified as interest. And after that period of 10 years, instead of paying 28%, the rates reduce or every 5 years and every 8 years. So you can reduce from 28% to 11.2%, which is a very favorable product. And again, the UK inheritance tax is just quite complicated, but the main things to have an understanding is it's based on domicile, not residency. And it's very hard to use your domicile, which at least there's a minimum of 5 years you're going to be liable to your domicile. And it's based on your worldwide assets. So it starts there's an exemption up to 325,000, which you can add maybe your main property, which could go up to 500,000. But anything on top of that, this is your whole estate, the UK will tax at 40%. So it's important to have an understanding of this before making a move. And there's ways to mitigate this, and there's several options as well. But is a very complicated topic. So the main conclusions is we recommend getting an agent to help you with the paperwork, because some of the paperwork may be in Portuguese and there's a whole lot of paperwork involved. And if you're doing everything yourself, you can get lost in a lot of things. So we have partnerships with lawyers, accountants, estate agents that can help you with all this difficult paperwork. When it comes to the financial planning, we recommend to plan ahead and get a strategy together well ahead of making the move, so you prevent from making any mistakes. Make sure you get the correct visa, because considering your objectives, you may fall under different. You may apply for a different visa. Any ISAs, if you're making this move, it's more beneficial to cash it before you make the move, and look for an advisor that is licensed to help to operate in Europe, that could help you design this long-term plan, especially if you want to stay here and to retire, for example. And definitely apply for the NHR, the non-habitual residency, because it's definitely much better off. You're going to be much better off than being a normal resident. So definitely take advantage of that. So that's it. Now I just save some room for some questions.
Fabulous. Thank you so much, Ricardo.
Oh, of course.
Everyone else, we have a questions tab in the bottom right. We will try and answer as many as we can. I have a few in the bank already, Ricardo, if you don't mind. Do you know if there's a minimum price for owning a property in Portugal for a US citizen?
Sorry, can you mention that again?
You should be able to see the questions. They're just on the right.
I see it. I see it. Okay, yeah, perfect. I see it. Minimum price from owning a property? No, it's so US sits on the non-EU national. So there's no except if you're going to apply for the golden visa, that you need to fall under one of these requirements. If you're applying with the D7, these are the only requirements, so there's no need for a specific amount of owning a property. So I see there's the next question is from George. Income from foreign sources taxed at 0. That is what the NHR could be a bit confusing. So it depends on the type of income that you have. So the NHR what clearly says is that if the tax is paid at source, then there's no tax here in Portugal. However, this could be sometimes difficult to assess because, for example, the personal allowance in the UK, if you don't pay, you might receive, let's say, 10,000 euros a year, and then there's nothing to paid in the UK, therefore you're paying it here. But the dividends, the interests, the rental income, for example, that is all paid at source. Therefore, nothing is paid here in Portugal under the NHR regime, of course. So, okay, Don, I have no problem. What are my options?
So I'll just read this one aloud so everyone else can understand. because everyone's not able to see the questions.
Oh, okay, sorry. Okay.
Ricardo.
Okay.
So the next question is, a lady has her appointment for the digital nomad visa in February. When her visa runs out, what are her options if she decides to stay permanently, with her income being majority from the UK?
So with that, there's, again, these are the most common types of visas. There are, again, like the digital nomad visa. There is probably there is for sure a work visa that you can apply, especially if you're working from a UK company. The D7 could be, as long as you can prove that you have a salary with that UK company, that is for a specific, at least that meets a certain requirement and it's constant and it meets this minimum. But again, that's why I mentioned with specific situations, it's important to evaluate the different options, because it could be there's different options for everyone. It might not be, for example, the D7 could be a different one. There's different types of visas. Again, I'm happy to help in more detail specific questions.
Fabulous. And which one was I just on? I did want to ask, on behalf of a couple of people, do people in the UK and Ireland pay tax on their pension when they move to Portugal?
Do people pay tax on their pension when they move to Portugal? Depending on the type of pension you have. So let me just go on the pension slides. Depending on the type of pension that you have, if it's an ARF, for example, if it's an ARF, that's going to be taxable in Ireland. If it's a private pension and it's paid gross, then it's taxable in Portugal at 10%.
Fabulous. These slides will be available on demand, everybody, after the seminar is over. Do you know if there is a language test, Ricardo, for the Golden Visa?
I think I need to go. That's a good question. I know there's a test for the residency after the 5 years, if you want to become a permanent resident. I need to double check if there is one for the Golden Visa, and I will get back to you if there's a specific test on that. I'm not 100% sure. It's not really my area. I speak with my lawyer when it comes to that. About the interior locations, so it used to be available everywhere, but there's been new changes. So specific areas in Lisbon, Porto, the Algarve, so down here, the coastal areas, you can no longer buy houses that apply for the Golden Visa, but anything up to the interior, there's a specific map that gives you where the areas that you can apply for the Golden Visa, and they tend to be more restricted with time goes by. So
our next question is, sorry, is, does Portugal have tax treaties with non-EU countries that have effect on NHR?
So yes, there's tons of double taxation agreements in place, with depending on what the non-EU country you're talking about. So it could be the UK, the US, Australia. So there's several double taxation agreements that cover the tax consequences, and they help and having an understanding within HR. So if you end up paying tax on both sides, double taxation agreement comes in place, and you only pay on one side, and you can get tax credits from the other side. So there's ways to mitigate that.
Fab, thank you. We have had quite a few questions. These will be sent to Chase Buchanan after the seminar.
Of course, yeah, happy to answer all those.
Yes, so you will get an answer, don't worry, if we don't get around to your question now. If you have dual citizenship in the UK and the US, is it better to apply with a US passport?
That's an interesting question. I think it will be very similar. It just depends on where you're located, because you need to, I believe that if you're applying with the US passport, you need to apply from the Portuguese embassy in the US, if I'm not mistaken. So it just kind of depends where you are located, honestly.
Yeah,
But I
you're
don't
right
think
on
it.
that
I
one.
don't think it. Yeah, I don't think it matters.
Just having a look through all these questions. If you plan on retiring in 10 years in Portugal, is it possible to buy and own a property now? And what
yes.
taxes apply in this case? So I
If
think in this
you're
situation, he's looking to buy a property now and
Mhm.
plans to retire in 10 years.
The only thing, yeah, you can do that. It's basically, I'm not sure what country you are in. If you're in UK, you are owning an overseas property. If you're renting that property, you just have to pay, the rental income on the country that you are. But if then, yeah, a lot of people do that, and it's just an extra property you have, so there's no problem. And then you can come to Portugal and elect that property to be your main residency. With buying a property, it doesn't put you as a Portuguese tax resident, as long as you don't apply and don't stay more than 183 days. It could be just your holiday home.
Sorry, the questions just keep coming in. I've been asked, can we clarify if Irish residents pay tax on their occupational pension and private pension when they move to Portugal?
So if you have an occupational private pension, when you move to Portugal, so if you get the NHR, you will pay 10% tax for 10 years on that pension, as long as you don't decide to get an ARF, which is basically an annuity. But if you have pension paid gross, those are usually just paid in Portugal at 10%. Again, with that is where I would suggest to look at different options, because if you're making the move to Portugal, there could be international options that are just better when it comes to the simplicity and to give you managing that pension. But again, it's difficult to say yes or no. It's an option that you have and maybe more beneficial. But when it comes to tax, if it's not one of the type of pensions that is taxed at source, like a government pension, if it's private pension, it's only 10% in Portugal.
Fab. Can you tell us what the difference is between residency and domiciliation?
So residency is where you live. So you have your, I'm using a UK example, a UK person. They are living in the UK, and the domicile goes depending on where you usually see where is your father born. If your father was born in UK, most likely you are UK domiciled as well. If you're making the move to Portugal, you are changing your residency, but your domicile, because your family, your father, most of your assets are still in the UK, like your house, and it's very hard to lose your domicile. So one of the rules is that you need to live 15 years out of the last 20 outside of the UK to maybe lose your domicile. But it's a very specific topic. There's a lot of things. There's a lot of things involved, but the main difference is that domicile is based on your father, if he was born in the UK, for example. While residency, you can change your residency to Portugal, Spain, Italy, while your domicile most likely will be still the UK.
Fab, thanks, Ricardo. I'm afraid we've gone a little over, and I'm afraid that's all we've got time for tonight, everyone. Thank you for your questions. Thank you, Ricardo. All of your questions will be forwarded to Chase Buchanan, who will be able to get back to you individually. And we will be following up with an email for you. Yes, Albert, the webinar will be accessible afterwards. It will be available on demand. I will be writing an email within the next day so you can access it on demand, and you will also have contact details for myself and Ricardo. So thank you very much for your time, everyone.
Thank you for attending, and yeah, have a great day.
Bye.
Bye-bye.